on that. I'm gonna mention one other thing here. I want to talk about why bonds, because I get this question all the time from people. Why bonds? People tell me, they say, you know, the rates of inflation are so high. Why in the world would I buy a bond? That's one of their favorite questions. And I would love to answer that. I'm going to tell you, but rather than me give you Benjamin Z. Miller's opinion, I'm going to talk about what a Nobel Prize winning economist, Harry Markowitz, he won the 1990 Nobel Prize. I'm going to share what he actually did with his portfolio. And the thing about Markowitz is he is so well known. He actually was very involved with contributions to modern portfolio theory, which a lot of investors use as kind of the base of how they make investment decisions. So, but when it came to his own investments, he did it a little bit differently. I'm going to tell you how he did it. So this is a quote from Harry Markowitz. He said, "I visualized my grief if the stock market went way up and I wasn't in it." So he was imagining, boy, if the stocks went way up and I didn't own any stocks, that'd be bad. Or if it went way down and I was completely in it. So the opposite, which a lot of investors, they're I'm going to be all in stocks. Yeah, that's a great plan if you like to gamble. So he was saying, what if I had all my money in stocks? And I see people do this. They'll put all their money in stocks. You know, it's like they think they're gonna show everyone how smart they are. There's a lot of them that suffer once they make that decision. But say you got somebody that puts all their money in stocks, it goes down. Think how devastating that is to see the type of losses. You can have a 20%, 30%, 40%. Oh, it can be awful. So what he did was he would just split his contributions. He'd do 50% in stocks and he'd do 50% in bonds. Now, I want you to think about your own portfolio, folks. And I want you to ask yourself, what percentage of your portfolio is in bonds now? Just think about that. And this is relevant is you can't predict what's going to happen in the future. There could be a Black Monday. You know, some of you may remember Black Monday in 1989, where the stock market crashed. You know, and there's been a lot of these things that happen from time to time. They have a bad habit of happening at the wrong time. So if you're all in stocks, you're going to be all clobbered. Whereas if you do it the way that Markowitz was doing it, where he had half in stocks and half in bonds, if the stock market crashes, you can liquidate some of your bonds and you can buy stocks, or vice versa. If your stocks go way up, you can acquire more bonds. You just rebalance it maybe once a year. That's what Markowitz did, you know, and he won a Nobel Prize in economics. It might be worth thinking about that. So I just encourage you to consider that. So why secure our notes with Texas mortgage debt? Great question. Texas is a state that is winning. We are a state that is winning. We've got people moving in from California. They're starting companies in Texas. We've got people moving in from New York. They are tired of those high, expensive New York prices, and they come to Texas. And when they come to Texas, they want real estate. And they buy real estate and they pay top dollar. Every real estate agent in Texas loves it when a California or New Yorker comes in, because they're going to not fight as hard as a Texas buyer on the prices, because to them, it's nothing. It's nothing, the prices in Texas. So it's something that helps us, because the more that the real estate prices go up in Texas, the better it is for Alamo, because our assets are secured by Texas real estate. So the more the prices go up, the safer our loan portfolio is. So just something that's real important. Last slide or two, and then I'll finish up and take any questions. So what are the key features of the bond? Well, the first one is you can reach your passive income goals. And I would love to set up a time where we can talk one-on-one. You can message me, you can call me. You can find me on LinkedIn, whatever's convenient, just message me. We can set up a time and we can talk, but let's go through that about your passive income goals. Are you trying to get 5,000 pounds a month in passive income? Do you want 10,000 pounds a month? Do you want 1,000 pounds a month? We can make that happen for you in as short as 30 to 60 days, depending on how much capital you have available to invest. So We are there to provide you with solutions, and we're set up to absorb large amounts of capital. The mortgage market is huge. We can support very large placements. We offer maximum diversification, and that's what's great about it is you're not just investing in one note when you invest with Alamo Mortgage Holdings. You're investing in all of our notes. So as we acquire new notes, you are invested in those. It is a beautiful situation because you own a bond and the bond is guaranteed by the collateral of notes. So it's a beautiful situation. No fees. Now, some of you, you may have met a hedge fund manager. I would not be surprised if you've been pitched on hedge funds, with you being accredited investors and institutional investors. And those things can be great. I'm not giving hedge funds a hard time. God love those guys. I think it's great that they're out there trying to make money. I understand it. But let me tell you what I think is better for your consideration. They like to charge a lot of fees. They will charge you 2 and 20. Oh my God, 2 and 20? Wow, that's a lot. That's a lot. I'm not going to tell you what percentage of them succeed. I'll let you research that, but they charge a lot to gamble. This is not a gamble. This is something where we're taking down a hard asset and we're paying you passive income, and we don't charge you any fees. We're not trying to make money on the exchange rate. We give you the listed exchange rate. So when you convert from pounds to dollars, whatever it is on that day, and you'll know it, that's the exact amount you get converted at. We're not even marking up the exchange rate. We want you to get a good, clean conversion. Another thing that's great is we offer flexibility of interest payments. So you can get semi-annual or you can get annual. We can talk about all that.